India's experience provides an effective digitalization strategy for public authorities, including central banks. DPI has enabled India to achieve, in less than a decade, levels of financial inclusion that would have otherwise taken several decades or even more. Based on our experience from the pilot project, a nationwide launch of the ULI will be done in due course. We are celebrating the 90th year of the Reserve Bank of India in the current financial year. This global conference on digital public infrastructure and emerging technologies is among the marquee events that we are organizing to commemorate this significant milestone of the Reserve Bank of India's journey. It's my pleasure to extend a warm welcome to each one of you present here to this conference, which is being held in this beautiful and vibrant city of Bengaluru, a city which for many years now has been at the forefront of India's technology revolution. I would like to extend a special welcome to the esteemed participants who have joined us from many parts of the world. Thank you all for accepting our invitation and for being here. I sincerely hope that you will find the deliberations and interactions during the global conference enriching and also productive. The theme of this year's conference, Digital Public Infrastructure, that is DPI, and Emerging Technologies, is timely and relevant. It will shape the future journey of almost all economies of the world. Over the last decade, the traditional banking system has undergone an unprecedented technological transformation. By all indications, this process is likely to become even more intense in the coming years. In my address today, I would like to highlight the important role that digital public infrastructure has played in India's digitalization process and its contribution to inclusivity in Indian society and the economy. India's experience provides an effective digitalization strategy for public authorities, including central banks. I would also like to touch upon certain key issues underpinning artificial intelligence systems and the use of digital public infrastructure in addressing the issues in cross-border payments. Let me first focus on the meaning and the overall positive impact of digital public infrastructure. Digital public infrastructure broadly refers to basic technology systems created mainly in the public sector that are openly available to users and also to other developers. DPIs, that is digital public infrastructures, are scalable and thus can support systems that operate on a population-wide scale. They are interoperable and therefore spur innovation by being accessible to innovators. They are also cost efficient by virtue of their economies of scale. These three advantages of scalability, interoperability, and cost efficiency hold the potential to accelerate financial inclusion and transform the lives of people by overcoming traditional barriers like physical distance, documentation, and transaction costs. It can be said that DPI has enabled India to achieve, in less than a decade, levels of financial inclusion that would have otherwise taken several decades or even more. DPI spurs market innovation by reducing transaction costs, democratizing access, maintaining competition through interoperability, and attracting private capital. DPI, that is digital public infrastructure, offers a path to effectively manage critical national infrastructure also. In times of crisis, as during the COVID-19 pandemic, India and a few other countries were able to leverage digital infrastructure for vaccination programs and targeted transfer payments. Notable examples of DPI in other countries include verifiable digital identity systems such as Colombia's Cedula Digital, Nigeria's National ID or bank verification numbers, the Philippines' PhilSys, Rwanda's digital identity system managed by their National Identity Agency, Saudi Arabia's Nafat digital identity management platform, Singapore's SingPass, and the United Arab Emirates Pass of the UAE, and similar other initiatives by several other countries. The G20 Digital Economic Working Group developed the Global DPI Repository, that is GDPIR, Global DPI Repository, which is a comprehensive resource hub, pooling essential lessons and expertise from G20 members and other participating countries. Its primary aim is to bridge the knowledge gap in the choices and methodologies required for the design, construction, deployment, and governance of DPIs. The final report of India's G20 Task Force on Digital Public Infrastructure was released on July 15 this year, which has, among other things, contributed to accelerate the acceptance of the definition and framework of DPI. This agenda will be taken forward for implementation during the subsequent presidencies of the G20. Let me now turn to India's experience with digital public infrastructure. India's DPI journey is a unique model wherein the basic technical infrastructure, that is the technological infrastructure, is built, operated, and managed in the public sector, while the private sector accesses the DPI to create innovative customer-facing services and products. The advantage of developing DPI in the public sector is that typically the private sector would be averse to capital investment to create infrastructure with uncertain returns. Privately created infrastructure may not also be amenable to democratized access or interoperability. The unique approach of India is therefore conducive for designing services and products which are competitive in the open market. In the area of finance, systems that facilitate digital payments, digital money, digital identity, and digital processes are the key components of DPI. India has carefully crafted its DPI strategy by focusing on three critical dimensions: digital identity, bank accounts, and processing infrastructure. Aadhaar, which is India's biometric identity system, provides a single and portable proof of identity. Around 1.4 billion Aadhaar numbers have been generated for the residents of India, which is near universal for the entire Indian population. Similarly, access to banking systems for the unbanked segments has been enabled through what we call the Jan Dhan accounts, that is basic, which is broadly equivalent to basic savings bank deposit accounts. Under the Jan Dhan scheme, more than 500 million bank accounts have been opened for beneficiaries. With regard to processing infrastructure, basic connectivity has been ensured through availability of affordable mobile phones and internet. The number of mobile-based internet users in India currently stands at around 0.9 billion, that is as of May 2024, with mobile teledensity at 83%. Even in rural areas, the mobile teledensity is around 60%. The trinity of Jan Dhan accounts, Aadhaar, and mobile phones, popularly known as the JAM Trinity, has provided the base DPI infrastructure, which is being leveraged for multiple value-added services. Of 67% of the beneficiaries under the JAM Trinity initiative, the participation, 65% of the beneficiaries under the JAM Trinity initiative are essentially from rural areas, and over 55% of them are women. This clearly demonstrates the role of DPI in promoting inclusion. Another example of DPI in India is the Account Aggregator Framework, a regulatory initiative of the Reserve Bank of India. This framework facilitates consent-based sharing and aggregation of financial information of customers among eligible financial system participants in a secure, transparent, and efficient manner. It enables MSMEs in particular to access cash flow-based financing from lenders with minimal documentation. The Reserve Bank over the years has facilitated the development of robust systems in the country for both retail and wholesale payments by supporting the creation of digital infrastructure like the Infinet banking network, the SFMS messaging system, RTGS and NEFT payment systems. In fact, RTGS and NEFT payment systems are currently in India 24/7/365, and we launched this during the period of the COVID pandemic. The current ecosystem of digital payments in India offers a unique bouquet of simple, safe, and secure options for instant or quick transfer of funds, both large and small value for businesses as well as for individuals. Unified Payments Interface, or UPI, a real-time payment system, was launched in India in April 2016 by the National Payments Corporation, NPCI, and it has played a significant role in the growth of retail digital payments in India. NPCI itself was promoted by banks under the guidance of the Reserve Bank of India. While initial participants on the UPI platform were banks, non-bank third-party app providers and use of QR codes have all combined in popularizing the UPI. It has since emerged as a robust, cost-effective, and portable retail payment system and is attracting active interest across the globe. Continuing on this journey of digitalization of banking services, last year we launched a pilot of a technology platform which enables frictionless credit. And this initiative is very important for all policymakers, for all authorities, whether they are from governments or central banks, or they are private banks or private financial companies. From this initiative which we launched last year, it's still in the pilot mode, and it's called, it's basically a technology platform for enabling frictionless credit. From now on, we proposed to call it the Unified Lending Interface. I repeat, the Unified Lending Interface, that is ULI. This platform facilitates seamless flow of digital information, including even land records of various states from multiple data service providers to lenders. This cuts down the time taken for credit appraisal, especially for smaller and rural borrowers. The ULI architecture has common and standardized APIs designed for a plug-and-play approach to ensure digital access to information from diverse sources. That is, information relevant to a lender for giving out a loan to a potential borrower. And the entire system is consent-based, that is based on the consent of the potential borrower. So the requirement of the data privacy is also fully protected. This entire platform and this initiative reduces the complexity of multiple technical integrations. It enables borrowers to get the benefit of seamless delivery of credit, quicker turnaround time without requiring extensive documentation. In sum, by digitizing access to customers' financial and non-financial data that otherwise resided in disparate silos, ULI, that is Unified Lending Interface, is expected to cater to large unmet demand for credit across various sectors, particularly for agricultural and MSME borrowers. Based on our experience from the pilot project, a nationwide launch of the ULI will be done in due course.